Welcome to Brief Encounters and this month's episode of the Securities Regulation and Enforcement series. My name is Valerie Mirko, and I'm a partner at Armstrong Teasdale, as well as the leader of the firm's Securities Regulation and Litigation practice. And with me is my co-host, William Nelson. William, will you go ahead and introduce yourself?
Yeah, hi, and thanks, Valerie. And I'm William Nelson. I'm the Director of Public Policy and Associate General Counsel at the Investment Advisor Association.
And we're kicking off this January episode, which we're recording on January 12th, and it'll be released in a few days. But we're kicking it off by focusing on crypto. And we have a guest today. And William, I was hoping you could introduce our guest as well.
Yeah, absolutely. And thanks, Valerie. And yes, we are very excited to have Caitlin Barnett on the podcast today. She's the Director of Regulation and Compliance at Chainalysis, which is a crypto fraud investigative company. But Caitlin, before we get started, I would love for you to introduce yourself, tell our listeners who you are, and just a little bit about what Chainalysis does, and then we can go from there.
Sure. Thanks so much for having me today. Really appreciate it. So like you said, my name is Caitlin Barnett, and I'm the Director of Regulation and Compliance at Chainalysis, which is a blockchain analytics firm. Really quickly, the way that I like to think about what blockchain analytics does is we're providing real-world identifications at the entity level to the blockchain, which helps both public and private sector customers investigate any type of potential illicit activity. I have been with Chainalysis for almost 5 years, but prior to joining Chainalysis, I was actually a customer. I was the Deputy Chief Compliance Officer at Gemini Trust Company for 3 years, and then Chief Compliance Officer at Bitstamp USA for 2 years. Before that, I held a number of legal and compliance roles within traditional finance. And for the past 5 years, I've been really focused on working with all of our customers, but particularly focused on the private sector side with traditional financial institutions entering the cryptocurrency market and helping them to navigate this fun, ever-changing world of crypto compliance.
That's great. And thank you again for joining us today, Caitlin. We're so excited to have you. I wanted to kick off really setting the context of the landscape around crypto fraud, because we know it's a concern for many regulators. We also know that there's a real focus right now on legitimizing crypto and having a path forward to a crypto landscape. So we've talked about that in past episodes. Today, we're really focusing on the fraud aspect, since you are our guest. And I wanted to ask you, from your perspective and Chainalysis perspective, how has crypto fraud meaningfully evolved over the last few years?
Yeah, it's a great question. And I think the high level way that I would answer this is that crypto fraud has become more professionalized and more targeted. Early fraud was, often opportunistic, and it mirrored a lot of what we saw in traditional finance. It was a new technology, and anytime we see new technology, we see illicit actors try to come up with ways to utilize that to their benefit. So early days when I was at the exchanges, because you're dealing with not present customers, meaning it's, an online platform, one of the things that we were dealing with was unauthorized ACH as an example. And so we were trying to figure out, okay, how can we combat this? And we came up with a number of different ways that we could put additional KYC measures in place and things of that nature. But I kind of like to describe fraud as whack-a-mole. The minute you identify one pattern, they come up with something else. So what we've seen now is, in terms of more professionalized and more targeted, there are organized fraud rings, there are long-running scam infrastructures, and then clear specialization as well. I think one of the most notorious and popular fraud scams that we're seeing is something called pig butchering. And I hate the name because I feel like it gives such a negative connotation to the victim. But essentially, pig butchering has monetize the basic scams and frauds that we've seen forever, romance scams, investment scams, things of that nature. But they're doing it at large scale where they're basically human trafficking people, having them set up in these huge compounds in Southeast Asia And these people's full-time jobs is to reach out to prospective victims either on Telegram or WhatsApp, any social media network, and develop these relationships where they convince these individuals either through a romantic relationship, they'll try to get them from an investment perspective, and they essentially fatten up the victim. That's the pig part. And then they eventually butcher them where they steal all their funds.
Yeah, and thanks, Caitlin. And I know those are such sad stories. Even another part of that is sometimes even the people in those compounds are not there willingly, or they're also being tricked. That's another really sad part about it, is there's kind of multiple victims in the chain. One question I did have, and this is, for me, but also our audience, I think that, we hear so much about crypto fraud, and, you've already brought up pig butchering and all these other different types of scams. But from your position, being the investigative expert, what's one of the biggest maybe misconceptions either we as lawyers or even the regulators may have about crypto fraud?
Yeah, I think the two biggest misconceptions that still exist, and it's been around since crypto first came onto the scene, people still think that crypto is completely anonymous and that it's impossible to investigate. And in reality, the blockchain activity is highly observable, and investigations often benefit from more transparency than traditional financial crime. And that's because when it comes to illicit finance, we're still seeing that cash is king, right? Because you can't tell that, Caitlin Barnett gave $1 to William Nelson or to Valerie for a drug transaction. However, in crypto, the blockchain is immutable and the transactions will be there forever. So if I did pay you for some sort of illicit activity, you would be able to see that on the blockchain.
Got it. Yeah, no, I think that is really helpful because I think you're absolutely right, Caitlin, that there is this perception that crypto is, being used for illicit means because of its anonymity. But I think that's a really great point to make. Moving into kind of the work you do on a day-to-day basis, can you just, explain for me, Valerie, and our audience, at a high level, how do these blockchain forensics work in practice? We did have in our last year's September episode, David Adams from Mintz, Levin, kind of talking about more of the, what is an investment, what's a security on the crypto side. But can you just kind of walk through maybe how do these blockchain forensics work in practice?
Sure. So, at a high level, what Chainalysis is doing is providing real world identifications at the entity level based on the various transactions that occur on the blockchain. And from those transactions, we're able to then cluster those wallet addresses into larger entities using a number of different techniques. So we have at Chainalysis an entire team called our Global Intelligence Team dedicated to doing exactly that. And within that team, we have specializations from linguistics, we have former law enforcement capabilities. And so each one of the sub teams is dedicated to different subgroups within our categorization. So we can get these from any number of different ways. Early days, we were literally just going and interacting with specific services. So someone would go set up an account on Coinbase and we would get a wallet address. And from there, we were able to use specific heuristics associated with the blockchain to then cluster that into a larger entity. So today, Coinbase has, well over 1 million addresses clustered, and then that is spit out to both our public and private sector customers. On the more nefarious side of the house, from an analytics perspective, we get the identifications in a number of different ways as well. So one is just investigative in nature. A number of illicit actor groups use Signal, Telegram, going back to what I was talking about earlier, the way the fraudsters use the social media sites. We're able to then garner information from those websites as well and put that into our tool. All of our identifications are based in ground truth attribution. So we have a level of certainty that whatever address we were putting into the tool, we have some sort of documentation that we can tie back to say, we're sure it's this identification and here's why. And then so once we have all the different identifications in the tool, and we're able to classify them into all the different subcategories, a couple being on the more legitimate side, exchanges or peer-to-peer networks, Bitcoin ATMs, things of that nature. But then we also have the more illicit activities such as sanctions or darknet markets, things of that nature. We're then able to apply risk signals, which are applied across flows, not just the individual transaction. And so the focus on the blockchain forensics work is really more on patterns and networks and not just focusing on those single wallets.
That's incredibly interesting. I think that you raise a good point that, it is more along the lines of almost like a law enforcement type of service. And I'm sure having those folks on staff is really important and very helpful. But, this is a securities law podcast. So my next question for you, Caitlin, is where do you see these kind of crypto fraud risks mostly directly intersecting with securities law and investor protection?
Yeah, it's a great question. And I would say that the risk tends to increase where there's high liquidity, fast settlement, limited controls at the edges. And so we see, unfortunately, stablecoins, cross-chain bridges, and some of the newer DeFi protocols often attract the fraud because they combine speed with composability. And so the market volatility also helps to amplify the fraud by creating urgency and then emotional decision making. And like we kind of talked about a little bit earlier with the fraud, these fraudsters know how to play on the emotional aspect of their victims. So whether they're able to sense that they've targeted a potential victim who's lonely, and so they use the romance angle, or if they target someone who's down on their luck from a financial perspective, then they'll offer, great investment returns, things of that nature. And so then with security laws, where does fraud intersect the most? It's primarily around those fraudulent investment offerings. Early days in, I think it was like 2017, 2018 was the ICO craze. And I remember I was at Gemini at the time, and we had so many different ICOs coming to us looking to open accounts so that they could offload all of the crypto that they had gotten as an investment. And we were kind of like, how can we, verify whether or not these ICOs are legitimate or not? And unfortunately, and I think it's still true today when we're, limited to securities laws that haven't necessarily scaled with the crypto ecosystem. I mean, and crypto is moving so fast that it's very difficult for any law or any regulatory framework to keep up. But we were applying the Howey test, unfortunately, at the time, because that was the only thing we were able to do. And we were also mandated that any of these ICOs go and get a legal opinion, so that they could support the fact that the offering they were have wasn't subject to a security law. And that very quickly was able to weed out the legitimate ones versus the non-legitimate ones, because people weren't going to go invest the time and energy in dealing with a reputable law firm to get an opinion if it truly wasn't something. We also see, unfortunately, market manipulation, misrepresentation of returns, liquidity or custody, and investor protection issues are often arising before the question of token classification. So even before you decide whether or not it's a security, it's what are the things that are being offered and promised to the customer or potential investor.
Yeah, and that's really helpful. And I know we have, all those discussions going on right now, both at the federal agencies, but also in Congress. What's the security? How decentralized does a token have to be before it meets that threshold? You mentioned Coinbase, you've worked in the industry for several years. I'm curious, what compliance gaps do you most often see when you do have these regulated firms engaging with digital assets?
Another great question. So I think the first issue that is probably most common is education. And I think we saw this with every sector of the cryptocurrency industry. So, early days with the exchanges, with the DeFi protocols, and now with traditional finance moving into the sector, everyone just gets super overwhelmed at first. And so the biggest thing that we talk about at Chainalysis when we're talking with either a prospective customer or partner, especially again with the traditional financial sector, is you have to start with a baseline education. And I think that the biggest thing to remember, and it was my big aha moment, is it's really not that different from traditional finance, right? Because the regulatory regimes that are in place, they have the same expectations of cryptocurrency businesses that they do of traditional financial institutions. So I always like to talk about the New York Department of Financial Services as a great example. They were one of the first regulators to come out and provide some frameworks. And so as a cryptocurrency business in the state of New York, you could either register to obtain the BIT license or you could register as a trust company. And the differences between the regimes were not too different. And so when I first got into the cryptocurrency industry, which was back in 2016, the regulatory regimes were still evolving. And candidly, I had no idea about cryptocurrency. Cryptocurrency really wasn't even the term because it was only Bitcoin and Ethereum at the time. And so I really just applied those same basic compliance principles that I had learned within traditional finance. So I think some of the gaps that continue, it's over reliance on KYC without investing in transaction monitoring, specifically blockchain analytics. If you're going to start operating on chain, or even if you're going to start interacting with cryptocurrency businesses as a traditional financial institution, you really do need to utilize blockchain analytics to understand the overall risk profiles of the businesses that you'll be interacting with. Again, very similar to traditional finance compliance, but you have more insight when you're using blockchain analytics. And so it just strengthens and bolsters your overall compliance program. And then the other two areas I would say are the most common gaps is there is limited visibility beyond a firm's own platform, but that exists within traditional finance as well. So it's really just about how are you mitigating that risk? How are you updating your risk assessments? How are you updating your policies and procedures? And then the final thing is those risk models that don't adapt to the new technology. So whenever you're offering a new product or a new service, you do have to go back to your risk assessment and make sure that you're identifying those new risks and identifying how you're going to mitigate them.
Yeah, and that's so interesting. And your point about how, even though this is, a newer technology, there are still so many parallels and similarities with traditional finance and fraud and, having to look outside of your individual ecosystem. But moving into kind of what you do and Chainalysis does, I'm just curious, how does an investigation start? How do you go from that kind of on-chain activity maybe to this real-world attribution? And, what kind of intermediaries are you speaking with and kind of working with through the process?
Yeah, so investigations can start any number of different ways. And again, very, very similar to traditional finance. So if you are a cryptocurrency platform or a traditional financial platform, you do have transaction monitoring. And then the rules that you're setting up will alert for various red flags. When it comes to cryptocurrency, it's a little bit more nuanced and I would argue more straightforward in a sense because you don't have to rely on you will, of course, rely on patterns of activity, but that's not the only way that you get tipped off to potentially illicit activity. Because the blockchain is so transparent and because there are blockchain analytics firms like Chainalysis that are providing these real world identities, you very quickly can understand if you are potentially sending funds or receiving funds from an illicit source. So if I get an alert, and this again was my aha moment back in 2016 when I first saw blockchain analytics, when I saw that we were receiving funds from a darknet market and that I could very clearly see that, I could, file a suspicious activity report. I could close the account and move on without having to Google Caitlin Barnett LLC and see that she was registered in the British Virgin Islands, but domiciled in another country. And she was sending round dollar amounts. And I was looking at the wire details, trying to figure out what she was actually doing. I was very quickly and able to make a decision. To me, that was such a game changer compared to how we were relying on the various red flags from a transaction pattern approach instead of just understanding who our counterparties are. Now, all that to say, criminals are sophisticated and they won't necessarily just directly send funds directly to an illicit source. So you do have to start to utilize some of your traditional finance investigative techniques and look for various red flags. But those red flags that exist in traditional finance exist in crypto as well. So if you see somebody in a higher risk jurisdiction, trade-based money laundering, things of that nature, where you see activity from, say China to South America, that would be a red flag. The cryptocurrency industry, I find to be really collaborative in that the relationship between the private sector and the public sector is so strong, and the information sharing is so strong that oftentimes the cryptocurrency industries will either see a red flag themselves and say, hey, this guy is doing something shady. And they'll reach out to the respective law enforcement agency and, essentially send them over a tip. And then the reverse will happen as well, where if law enforcement is working on an investigation, they may reach out to the exchanges that are involved in the investigation and say, hey, do us a favor. They may send a keep account open letter so that they can continue to have the illicit activity continue to flow so that they can make sure that their investigation won't be hindered if the exchange were to close the account or something of that nature. But the collaboration is really something that is night and day compared to my time when I was in traditional finance. I always bring up this one story. When I was at Bitstamp, we had received a subpoena, and oftentimes, you get tons of subpoenas all the time and you respond to them, but you never really know what happens. Well, a couple months later, we received a letter from the government, and it was thanking us for our response to the subpoena and saying that because of our response, we were able to help them take down the largest child pornography website in the world at that time. That was the Welcome to Video case. And I always get emotional and choked up thinking about it, because this is where compliance and fraud professionals really make a difference, because we were able to shut down such a huge site that was impacting so many children worldwide. And to me, that was just like one of the probably highlights of my career.
That's amazing. And I'm so glad you shared this with us. Caitlin, something you said really struck me about how using these types of tools now allow you to do this work also much more quickly than when we were looking at red flags in more traditional financial companies. Is that accurate? There's just a speed element that seems transformative for your work.
I believe it is. And the reason I say that is because right before I got into crypto, again, back in 2016, my last role was in a special investigations unit within a correspondent banking division for a non US bank. So the wires we were seeing were pretty interesting and probably a little bit more risky than, say, a US bank. And this was when Panama Papers had broken as well. I'm sure you all remember when that came out. So we had a lot of good leads to look at, but you were limited to shell company names, right? So, first of all, you're searching your Wired database, looking for any name that mentioned, Caitlin Barnett LLC, if she was one of the entities that had been named in Panama Papers. And then I was able to get, interesting investigations and interesting leads from that, but I was still limited to the Wired details. And so I was looking to see, okay, what is she saying this $1 million wire is for? Is it a round dollar amount? Again, all those basic compliance red flags that we're used to from a traditional financial perspective. And then early days, I will say in crypto, it was very, very easy to identify the illicit activity because we didn't come up with, all these different protocols, and we didn't have all these different chains. And it was, again, it was really just Bitcoin, and it was just Ethereum. But the same basic tenets of blockchain analytics does apply today. And what I mean by that is, like, the blockchain is immutable. You can't erase a transaction. You can't take it offline. You eventually do have to cash out because, again, cash is king. And so that's where we're seeing the compliance programs at these various cryptocurrency businesses become so important, because they're the way that we can finally stop and identify the illicit activity and the illicit actors. So it might be my own personal opinion, but I truly do think that blockchain analytics is transformative and helps you move way quicker from an investigative perspective.
Yeah, and that's terrific. And yeah, I think just in this day and age with the speed of transactions and just all the information, I think it's really important to be able to do that quickly. You've talked about your investigation, you've talked about, looking at illicit activity. Once it's identified and, you hear all these stories in the news about, oh, I lost my private key, I can never recover my funds. And how realistic, I think has come a long way over the, last 3 to 5 years, but how realistic is kind of that asset tracing and recovery, and what typically may make or break a case being, oh, now that we have this information, we're able to recover those funds?
Asset recovery is way more frequent, I think, than people probably think it is. I will say cryptocurrency in general does move very quickly. And so one of the the hardest things is once it is moved off a platform, it is difficult to then seize or freeze those funds. So if I have an account at a regulated exchange and a fraudster convinces me to send it to their wallet, it is technically gone. However, when we're seeing these large scale fraud schemes or these large scale hacks, the fraudsters will move those funds and they will move it to potentially private wallets and things of that nature. And they're patient. That's the one thing that I give these fraudsters and criminals a ton of credit for. They are insanely patient, but we can still see where those funds are sitting. And the minute it then does go and move to a centralized exchange or any centralized point of contact, that's where law enforcement can then go and seize and freeze those funds. So it is a bit of a waiting game and it is a bit of cat and mouse, but we have companies in the industry that are dedicated just to asset recovery for cryptocurrency, and they've had a ton of success.
And that's really good to hear, Caitlin, because I think that is one of the other maybe potentially misconceptions is that it's so hard to trace these funds and it's so hard to get people their money back in the recovery. But it is good to hear that just with the technology today and the law enforcement capabilities, that does tend to likely be more successful than I think it's kind of put out in the news.
I think that brings up another good point, right? So it's so important for any victim, no matter what the dollar amount is, to go and report it to their local law enforcement. Because if it's happening to one person, it's probably happened to a handful of others. And the more data points and information that law enforcement gets, that's how we identify these fraud rings. So one victim might lose $100,000, and while that's a ton of money, and I'm not trying to say it's not, unfortunately, to law enforcement, it's not that much. But if you have 10 victims who lost $100,000, now we're talking about 1 million, and that raises the level of the profile of the case to more importance, and then law enforcement can then dedicate more time and energy. So it's super important for victims to report, even if they don't think they're going to get anything out of it, and they might not, within the first week, month, even year potentially. But if we get more information and are able to identify those fraud rings and take them down eventually, that's where it becomes really important.
Yeah, and I think that's a great point, Caitlin. We see that too, even in traditional finance, they may feel embarrassed or, oh, I'm likely the only one that could be fooled by this scam. But I think you're absolutely right. Generally, if one person is, the scammers aren't just focusing on one person, they're likely focusing on hundreds, maybe even thousands.
100%.
Exactly. But I know we only have a few minutes left, and this has been an amazing conversation so far. But we couldn't have a podcast, I feel like, in 2026 without talking about artificial intelligence. I'm just curious on kind of your views. First, how does Chainalysis potentially maybe use AI in your investigations, but also kind of how you see that potentially transforming the crypto industry. And we've even heard, starting to hear, rumbles about quantum computing and potential ways to break certain, levels of cryptography. So I'm just curious kind of your views on kind of the emerging technology you're seeing in the industry.
Yeah, this is one of my favorite questions. So, around this time last year, I can't believe it's been a year already, Chainalysis actually acquired a company called Alteria, which was utilizing AI to combat fraud. So, like we talked about a number of times throughout our conversation, you have scammers who are actually using AI to reach out to potential victims on all different social media platforms and obtain as much information as possible and then utilize it to eventually scam them and take their life savings, so on and so forth. What Alteria is doing, and I think it's brilliant, is they're using AI to interact with the fraudsters and try to obtain as much information as possible from the fraudsters so that we can then spit it back to potential customers, whether it be traditional financial institutions, cryptocurrency businesses, law enforcement, so that they can identify the potential fraudsters upstream and block their customers from even interacting with the scammers. So they'll collect name, date of birth, bank account information, cryptocurrency addresses. So this goes beyond just the blockchain, and it's able to be utilized for transaction monitoring workflows from a wire perspective. So if you got a bank account number, for instance, you could put that into your tool and block it. So I'm probably Alteria's biggest fangirl internally at Chainalysis because I think it's just going to revolutionize the way that we interact with fraud. And the fact that we're utilizing AI to scam the scammers who are using AI, I just think is genius.
Yeah, no, and that's terrific that you're kind of, turning it back on them,
Yeah.
same technology. So I think that's terrific. Before we let you go, Caitlin, I know one thing we always like to ask our guests is if we have attorneys potentially looking at their clients and, investing in cryptocurrencies or, even compliance professionals, what's maybe one practical step either the individual firms can take today to kind of reduce their risk of, these certain things happening?
I say it all the time, and I said it already here. I think education is the biggest thing you can do. So, one, make sure that your firm is educated. There still is that misconception that all crypto is bad. So, I think level setting that not all crypto is bad, but being able to understand what is a red flag versus what is not a red flag is huge. And then from there, once you're educated internally, making sure that any customer or client is educated as well so that they can understand where their risks exist and help put policies, procedures in place to avoid any risk or at least mitigate it. Maybe not avoid is the right word.
Well, again, thank you so much, Caitlin. This has been an amazing conversation. I know I've learned a ton. It's been so wonderful to hear what Chainalysis is doing, what's going on in the industry from the fraud perspective, because I think you're right. We generally tend to hear about the investment side and the hot token or whatever the case may be. So, Valerie, I didn't know if you had any concluding remarks before we go.
I just wanted to say thank you again, Caitlin. This was fascinating, especially for someone like me who does a lot of investigations, whether it's internal investigations or representing clients in SEC investigations and building a defense strategy. So I really enjoyed hearing your thoughts on this, and I'm so glad you were able to join us.
Thank you so much. I really appreciated chatting with you all.
All right. Well, thanks again, Caitlin and Valerie, and I look forward to convening next month.